Hi guys, welcome back to the channel, the Daily Forex. So in today's video, I'm going to show you guys how to trade Boom 500 index successfully and how you can use this trading strategy to make profit on the market. Okay, so right now we're looking at the market structure and you can currently see this red arrow line pointing towards the moving average. Okay, first of all, I'm going to show you guys the parameters for these indicators. We're currently using 3 indicators, but the 4th indicators is the moving average, right? So on the main window, which is the main window, right? Now we'll go over to the indicator section. For the main window, you put on moving average. Okay, moving average on period 200 shift 0. The method is exponential. Then you apply to close. Then for the levels, you don't add any levels. For the style, you put it on 2 pixels with the color purple right here. Then you use the second line pattern right here with this first one. You click on done. Then for indicator window 1, you put on the RSI on period 14. You apply to close. The level is going to be on 90 and 10. Okay, just 2 levels, level 90, the level of 10, the style. And for the style, you put it on the last one, which is the 4th one. Then you put the color on black or whatever color you choose. Then you put the straight line pattern here, which is this first one right here. Then you click on done. It will take you back to the main page, whereby you put the style again on the main page on the color white and the first line pattern right here, which is the pixel one. Then for this line right here, you put it on this first one here. You should click on done right here. Okay, then MACD indicator, you put on fast EMA on 14, slow EMA 24, MACD SMA on 10. You apply to close. You do not add any levels. You apply to all time frame as well. For the style, you put the main color on black on the 4th line. You take it to the end. The signal, you put it on red color. Then you take the line to the end, which is the 4 pixels. Then you put the line right here, this first tick line. That should be it. You click on done. Then you add the average true range at the last. Okay, using the same parameters we used for the main window. Okay, using the same parameters and the same setup for the moving average. Okay, then you click on done. Okay, now this is how these indicators should look on your trading chart. Okay, now let's get to the strategy right here. If you take a look at this point right here, you can see that I draw an arrow before I started showing you guys the parameters. Okay, first of all, let's draw another one right here. Then from this point, let's draw another one right here, taking upwards down to this point right here. Okay, I just want you guys to trace it right here. If you trace it downwards, you can see that at this point, from here downwards to this point, the MACD is going downwards to the level of 10. All right, you can see at this point right here, if you trace it down from here to this point, it's going from here to the level of 10. Please take a look at what I'm showing you guys. Then we should draw the square line right here at this point. Okay, we're drawing it. So this is going to be the breakdown. Okay, this is going to be the other block where we're going to be taking our sell from this point right here. So we draw this square line at this point right here. So it's going to be the other block at this point. Now if you take a closer look at this point, you can see that when this moving average crosses above this sell line of the boom market, you can see that it crosses above this point. So the sell broke below the moving averages. And if you take a look at this, the same point where the moving average crosses above the overbought, which is the level of 90, and when it crosses above, meaning that the market is going on a downward trend, right? Even though there's going to be a spike at the market, but it won't be at this level, which is the level of 90. Take a look at this. It won't be at this point, which is the level of 90. So when it crosses above the level of 90, it's going downwards back to the level of 10, as we can see right here. If you trace it down from here to this point right now, you can see that it crosses above the level of 90 downwards to the level of 10. All right, now this is the overbought and this is the oversold. Okay, and when it crosses above this point right here, is a good opportunity for you to place a sell on the market, and you can talk about just 5 candle to 6 candlesticks from that point, right? Even though the spike is going to come into the market, but it won't be at this point. So when you see a crossing, immediately you place a sell. All right, you count 5 candlesticks, then when it has crossed below the level of 90, you will exit the market because the spike will come in. And if you trace it from here downward, you can see that the MACD is at the level of 10, and whenever the MACD is getting to the level of 10, the market is going to buy on boom market. Okay, now you can see that at this point right here, immediately it crosses above the level of 90, the MACD was creating a downward trend at this point. So this is the reason why I drew this red line right here, which is this arrow line, so that you can trace it. Now let me draw another one just to mark this point. All right, let's mark this point right here. Okay, good. Now I just marked that point. Now you can see that at this point right here, trace it down with me, guys. It crosses above here, this point is, hold on, above this point. Okay, it crosses above here, crosses above. From here you trace it downwards to this point. So when it crosses above this level of 90, the MACD is at this point right here. Okay, so you can't count 5 candlesticks from the market. Meaning that 5 candlesticks you are counting is going to be your sell entry. Okay, because this is the 1 minute time frame. So you taking those candlesticks, after you place a sell, you take 1, 2, 3, 4, 5 as your profit, then you exit the market so that you don't get caught up with a spike. So I hope you understand what I'm saying to you guys. So I'm going to show you that this strategy works. Now let's check here, previous trend market, so that you can see that it works and the spike does not come in between the level of 90. Okay, take a look at this point, for example. All right, here the overbought the level of 90. All right, this is the level of 90 at the overbought at this point right here, and at this point you can see right here the moving average at this point cross this point. The market broke down for a sell during this point, and right here there was a spike taking about 4 candlesticks from the market. This is the crossing. It crosses above. You can see this space right here. It crosses above here. It has to cross above, not in between the lines. Okay, you need to cross above. Then you see there's a spacing at this point. It crosses above, the market spikes for 4 candlesticks, and after that it started to sell, then it breaks down. So what you should do is to wait when you have seen a breakdown in price movement from the average true range. When the market sells below this point, which is the moving average, when it sells below this point, then you count your 5 candlesticks. You can't take 4 candlesticks to be more safer on the market. Okay, so this indicator help you see, you know, a better good entry position. Now you will say that, why didn't you just place a sell during this point? Because if you place a sell during this point, there is no signal for you to know if the market will buy again, unless if the market is at the overbought. And most time, even when you think that the market is at the overbought, the market can still buy again. Right now, this is why we're using these indicators to help us see the market charts perfectly and help us, you know, predict the next price movements on the market. Now you can see that at this point right here, it has to cross above. After you have seen the crossing above, then you place a sell, or you can wait until the price has broken down, which is have sell down below the moving average right here. Now if you go back to this previous market chart that we just came through in the market, you can see that if you trace it right here, you can see that market crosses above. You can see there's a spacing. It crosses above this level of 90, right? The level of 90, take a look at it, trace it with me, guys. It crosses above and the market break down below it. When it broke down below it, you see that it's sold below the moving average, then you can place your sell for 5 candlesticks and take a profit from that market. Now I'm going to show you that this actually works. I've tested it and it works perfectly. All right, take a look at this point as well. Here it crosses above. Let's zoom in the market so that you can see what I'm talking about. You see between this space for this moving average and this level of 90, there's a space at this point. You can see there's a space between the average true range, between the moving average and the relative strength index, which is the level of 90. And if you trace it upwards to this point, you can see that it was this point right here that the markets start to sell below the moving average, right? Take a look at this point right here. Let's mark this point so that you can see. Okay, let's mark it right here. Sorry guys, it was at this point here. Take it backward a little bit. Let's take it backward a little bit. Okay, so that you can see what I'm talking about right here. All right, now take a look from here. It crosses above. It started to give a space, right? It crosses above. You can see above, guys. Then you wait. Take a look at it. We're tracing from this point. Then it crosses. It started to sell below. Then you take 5 candlesticks from the market. Then you exit, because the spike is going to come in when this MACD touches the level of 10. Okay, now I hope you understand what I've said in this video. So this strategy actually works perfectly. You can see that when the moving average crosses above the level of 90 of the relative strength index, at that same point, the market on boom, it breaks down when it's selling below the moving averages at that point as well. So there's a crossing between the price and the indicator, right? There's a crossing between the sell market and the moving average. So when you see there's a crossing and the relative strength index is going downwards, meaning the market is going to sell towards the oversold, which is the level of 10, right? So at that moment, you want to place a sell when you see a breaking below, right? And when you see the breaking, you need to confirm on the moving average that is on the indicator window 1. You need to see the spacing between these 2 points right here. There's a space between the 2 points. Then you can place your sell entry and take a sell for 5 candlesticks. All right, so I hope you understand what I've said in this video. If you found value in this video, do it to like and subscribe to the channel, the Daily Forex, for more awesome trading tips and strategies. I'll see you guys on the next video.